Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today I'll be speaking with Mr. David Trungale. Mr. Trungale is the president and founder of the Trader Tours study course and newsletter located on the web at Trader Tours, and that's with an S at the end, .com. This TraderTours.com, I'm really excited about it. It examines everything I'm interested in: financial markets, stocks, options, ETFs, and commodities. So you definitely want to check that out. Mr. Trungale's trading approach underscores technical analysis and specifically focuses on trend following principles, which I'll be asking about today. So thank you, Mr. Trungale, so much for joining me today.
David, it's a pleasure. Thank you again for the invite.
Yeah, absolutely. I can't wait to tap into your insight today. So 2017 is well underway now, but some say that the quote-unquote Trump trade is starting to fade a little bit. People are starting to hedge, and they're starting to wonder, how should I hedge? What is the best way to do that in 2017 if people are heavily into equities right now?
Well, I think not necessarily the best way to hedge, but to mitigate risk is to move your equities into cash. The problem with hedging is that certain things go down while others go up. And if you try and over-diversify your portfolio, an up move can negate a down move, and you really end up treading water. So what I personally do, I have a lot of cash in my account right now. A lot of the stocks I'm holding are big blue chips, defensive dividend plays. That way I get a check every 3 months. And the beauty about dividends in some of these defensive stocks is that as you get that check, in addition to that, they hold their value well, especially during what seems to be the later stages of a bull market. And this market could go a little bit higher, David. It's hard to anticipate for sure. So many people are quick to try and call a top continuously. But remember, as we're following trends, you don't always want to be guessing. I'm a big believer in analysis. So instead of guessing when the market's going to top out, you want to be analyzing it and looking for clues. Looking for things such as moving averages crossing, looking for critical support and resistance levels to be tested or broken. So I'm a big believer in analysis, and like I said, I think the best medicine here is cash.
Cash is, in fact, a position. I totally agree with that. And I'm glad that you're not a top caller, because in my estimation, top calling is not a game that people can win in most cases.
I agree.
Yeah, totally. Wanted to talk about gold and silver. I get a lot of questions about gold and silver. Should I be holding it right now? And if so, should I be holding the physical stuff, or is it okay to go into ETFs such as GLD, SLV? What is your opinion on that?
I do think that the physical metals are a better play if you are concerned about a crisis. Now again, I'm not a big fan of gold and silver right now, and I haven't been for a long time. I started shorting the precious metal sector since 2012, and we've hit a bottom. It could be a permanent bottom, but it may also be temporary. It's hard to tell, in late 2015. So here's the thing. I agree with a lot of the libertarian ideas out there. And I think they're right in terms of trying to preserve capitalism, limit government power, recognizing that long-term inflation is a problem. These are all very valid points. But with that being said, if you look at the grand movement in the mining and precious metal sector, I think the best time to buy, and I know this is going to sound like a silly remark in hindsight, but you have to go back and look at the observations and look at what happened here. So the best time to be long metals was from 2000 through 2011. The right play from 2011 until 2015 was to short the sector. And this is just looking at the percentage moves and looking at what actually happened. And after markets go up and crash down, they tend to become very monotonous and dull. So if you look at the spot price of silver, for instance, we're maybe somewhere around $17 or $18 per ounce right now. I didn't check it today. But that price has been holding now for a long time. I mean, where were we a couple years ago? Well, silver was right around 17 or 18 an ounce. And like I said, we hit that low point in late 2015 where it got as low as, I think, 13.40 an ounce. So markets tend to go sideways, and very few people talk about that. And this goes well beyond the metals sector, David. If you talk about stocks, you look at all these other industries, just turn on the TV and you'll see what a laughing stock it is. I mean, you have people talking up markets, talking about a crisis, talking about a boom, all of these things. But you got to remember, reporters are paid to fill up their papers even when nothing is happening. So looking at the metal sector, it's been pretty dull. Yes, it seems like we've sustained a support level and that perhaps the bottom is in, but I don't see a whole lot of explosive upside. I haven't seen a lot of explosive upside. Like I said, the last time I observed that was way back in the mid-2000s. So did you want to move on to the Dow Jones, or did you want me to try and assess metals a little bit more on a short-term basis?
I think people would love to hear the short term. And you just brought up such a great point about tuning out the noise, not listening to every analyst, every report out there, and just keeping to the facts and not fighting the trend. That is so huge and so important. And that's what TraderTours.com is all about. And we'll talk about that in a minute. But sure, the short-term outlook, what would that be for you?
And here's the thing, the short term, I'll take a stab. It's always the hardest to anticipate. So when I analyze trends, what we're looking at is movement, right? So I like to go back and look at a 10-year graph, then I boil it down to 5 years, 1 year, 3 months. And I define the short term as anywhere from today to the next 3 months or so. Intermediate's going to be 3 months to a year. Long term, 1 year, 5 years, 10 years. So if you look at a short term chart of silver, meaning the last month or so, it does appear to be up. So the short-term trend is bullish, but in the last week or so it's rolled over, and you have to remember that May is a notorious month for sell-offs. So in the short term, what would I expect? Perhaps a slight retreat, but there is a temporary floor at around the $15 per ounce level. So I think we might roll down a little bit, but I'm not expecting anything dramatic to happen. And gold, pretty much a similar pattern. As you know, and a lot of your followers know, is they do tend to move together, although silver it tends to be a little more aggressive, both to the upside and downside. I would say it's more of a leveraged instrument.
Absolutely. TraderTours.com. I'm looking at the website right now. I like it a lot. I recommend people check it out. I notice you have a home study course with a special going on right now, as well as a newsletter subscription. Can you tell me about that?
Sure. I actually recently bundled the entire website into one package, and here's essentially what it is. So as you join the program, you actually get shipped out right to your door a DVD package as well as a workbook on technical analytics, something I designed myself. And the beauty of it is it covers everything from A to Z: how to set up an account online, what specific patterns to look for. I have live audio recordings as well as a visual that shows a couple of live trades in the DVDs to try and keep things as simple as possible for beginners, but also there are a lot of details regarding market patterns in it. As you join that, you're on the newsletter subscription for 1 year. That gives you an opportunity to look over my shoulder as I put out different trades and economic ideas in the letter. And after 1 year is up, you have the option to just renew the email portion of the letter. Granted, the DVDs and the workbook are yours to keep forever. In addition to that, I put out a new referral plan that's not necessarily covered on the homepage of the site, but as you join, you are given a referral code, and that gives you an opportunity to pull in additional income by actually marketing the course. So you have a chance to work for me right under my wing and go ahead and make some extra commission money by marketing the program.
Sounds like a good deal. Everybody should check that out for sure. And can they contact you at TraderTours.com@gmail.com?
Sure, that's a company email. Feel free to send any questions. I'm usually pretty good about responding to the emails. And there's also a Contact Us forum if anyone wants to utilize that on the website as well.
Very good, sir. And I will post all of that in the video description, of course. Wanted to talk about stop loss orders. Some people believe in averaging down. Others believe in stop loss orders. What is your philosophy on that?
Well, here's the thing. There's a trade-off with every action that you take. So a stop loss, and I have utilized them a lot in the past. Right now, with the defensive stocks that I own, I actually don't have any in, and that's due to the current market action. But the stop loss can be a powerful tool for limiting your risk to the downside. Obviously, the trade-off is that a little bit of market volatility can continuously stop you out over and over again. So it kind of comes down to individual preference. If you can get a feel for where you want to put your stop losses, some traders perhaps want a little bit more breathing space, and that way they're not going to get stopped out over and over. But I am a proponent of using them and trying to limit downside risk. Dollaring down, again, I'm not personally a fan of it, but that doesn't mean it can't work. Of course it can work. I just think that when you dollar down, you're investing against the trend and ultimately trying to forecast that a bottom is in sight, right? The whole idea behind the idea of dollaring down is you're assuming that the stock is going to reverse and go up in the long term. So I would say if you're going to dollar down, do so with large companies that have a track record of earnings and recovering in price. With commodities or some of the smaller caps, I think dollaring down becomes progressively more of a gamble because, you know, the S&P 500, the Dow Jones, even though, yes, I do think that we could go into a bear market here at some point, they do have a track record of rising long term due to the long-term earnings. And some stocks that are smaller, you know, it's more of a crapshoot where they can go bankrupt, they can go under, and those that dollar down during the bear market can really get hurt bad. So you have to be a little bit careful with dollaring down. But again, everyone has their own style.
Wanted to talk about short selling. You've been known for doing that very successfully in the commodities market. Is short selling for everybody? Is it something that any retail trader can learn how to do?
Well, anybody can learn how to do it, but to address your other question, is it for everybody? The answer is no. You know, there's a lot of risk associated with that, and specifically when I shorted the commodity sector, I mostly used put options. And I like staying as a buyer on the options trade because as you buy a put option, the most you can possibly lose is the premium that you pay for. So there isn't this unlimited risk, you know, I'm going to wipe myself into bankruptcy type of deal. So you should go into every trade, and it's very important to be cognizant of how much you're risking, what's the potential reward, and never go into a trade if you don't understand the mechanics because you don't want to risk any more that you can afford to lose. So this is why it's important to have cash on the side. It's important to have some loose cash in your portfolio. And yes, if you're going to consider some type of short trade, feel free to shoot me an email. I'll do my best to give you an accurate assessment. But no, it's not for everybody.
Definitely not for everybody. I totally agree with you on that. So people love it when I put out a video that has actionable trading ideas. Are there any companies, stocks, ETFs, or just sectors that maybe people are not looking at that they should be right now?
Yes. Of course, I have my exclusive list when you join the program, but a couple ideas, and may entertain a few people here. So Philip Morris and McDonald's, I think, are good long-term companies that tend to hold up well during recessions. And people say, come on, McDonald's, you know, give me a break. That's, you know, very unoriginal. Well, again, I don't care if something's unoriginal or not. The goal of trading is to make money. So I don't care how simplistic the idea is. I don't care if it sounds silly. Show me the money. That's what we're trying to do here as traders. We're calculated, we are deliberate, and we want to make a profit. So if you look at the graphs of companies, like I said, McDonald's or Philip Morris, that, you know, people are going to consume cheeseburgers. You know that people are going to continue to smoke and use tobacco products. Those are safe bets, and they tend to hold up well during market turbulence. Plus they pay dividends, which is good during a neutral market as well.
I like the sound of that. Dividends, almost like a consistent paycheck. Wanted to talk about options for a moment. Another way to make a consistent paycheck, at least according to some people, is to either write covered calls on stock that you already own or maybe selling puts. Is that something that you consider doing?
Not so much right now. If you're going to go down the options trade at this time, I would tend to agree that selling covered calls, though, is a more conservative route that I would prefer. Like I said, unfortunately, there is compensations that are made and trade-offs with every strategy. So if you sold an out of the money covered call and it goes up and someone exercises, yes, you still came out with a profit, but now you're out of the position and you're no longer getting that dividend check. So there are downsides with any strategy, but I do prefer covered calls over, I would say over like 90 to 95% of the other options out there, because there's a lot of risky trades that you can do as well that don't really have a track record of putting money in your pocket, even though they sound good in theory.
Yeah, and we got to be cognizant of that at all times. And just wanted to mention one more time, TraderTours.com. A question that I get a lot is, and you probably get it too, how much money do I need to start doing this? And by doing this, I mean trading or investing. And that's different for everybody. What would you say if somebody asked you that right now?
The number that I put out is somewhere around $2,000 for a minimum. You certainly could start out with less, and that's totally fine. It's just going to take longer, obviously, to compounded interest and build up an account growth. But ultimately, like you said, it really depends on the individual. What are their goals? What are their expectations? What are they trying to do? Is this a long-term value play where they're just going to put, $1,000 into a mutual fund or ETF? Or are they trying to get a little more aggressive and speculate their way to the top this year? So again, the answer is it depends, but I would say a couple $1,000s would be a good starting point. I mean, if you start out with just $200 after commissions and whatnot, it's almost not worth it. So you do want to scrape together a fair amount of capital, at least to start. It doesn't have to be a lot, but like I said, there are other priorities too, right? Get your debts paid off, and there's a lot of other things that should come well before speculating in the markets.
Gotcha. And just one more question, because I know your time is valuable. I love to watch oil. That's one of my favorite commodities to both buy on the long side, and sometimes I buy puts on it. Is there anything worth doing in oil or other commodities right now?
There certainly could be. If you ask me what I'm doing personally, I am not long or short oil, nor the precious metals sector, just because, again, I think there are other opportunities, but that doesn't mean that you can't make money in either of those sectors. You certainly can, and that's the great thing about being a trader, is if you're diligent and you know how to time the markets and you use tools to assist you, you can make money during long-term bull markets, short-term bull markets, bear markets. So in any market, if you trade it appropriately, you can make money in any given week.
Using technical analysis and all the due diligence that you put into it, I feel confident that that money can be made in any market. Just want to give you one more opportunity to talk about TraderTours.com. When people visit your website, what are they going to see, and what are you offering right now?
So again, it's essentially just a study course bundled into one package where they're on the email newsletter list. They get full support from myself. I'm here to help you. Any questions can be directed to me. You also will get the DVD package in the mail, as well as the workbook that walks you through everything essentially there is to know about technical analysis and trading. These recordings that I made myself, ideas that I personally implement to help get you on the right track with investing. But the bottom line here is, again, my door is open. If anyone has a question, whether you're a subscriber or not, I'll do my best to give you at least my honest opinion.
Fantastic. Well, right now I'm going to go out and check out some Philip Morris and some McDonald's. And hey, if you recommend it, it's probably pretty darn good, because I love me some dividends and I love me some McDonald's. Philip Morris, maybe I don't partake in it myself, but hey, nothing wrong with getting the stock, though.
And it comes back to what the public wants.
Yep.
Where is the demand at? So even though if you don't consume tobacco, what is everyone else doing? Where is their money going? So those are things that you have to watch and really accept the market for what it is. That's another thing that I tell my subscribers is, I look at a lot of things out there, whether it's in the macroeconomic world or just in general society, and I think, man, that's kind of stupid. It may be, but I can't challenge millions of people, and I can't stop them from doing what they're going to do. So as an investor, it's very important to adapt. And like I said, look at what's working. Look at what actually works.
Makes sense to me. Mr. David Trungale. Check out TraderTours.com. Contact him by email at TraderTours.com@gmail.com. Links all in the description of the video. Mr. Trungale, thank you so much for your time today. I really appreciate it.
David, thank you again. This has been fun, and I hope to speak with you again at some point.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.